Hey everyone, welcome back to Corporate Dakota, the place where we dissect corporate filings so you don't have to. Today we're diving into NextNav's annual report. This one's got it all. Big losses, spectrum battles, and a leadership shakeup. Sounds like a soap opera but with numbers. NextNav, a company focusing on next generation GPS technology, is trying to break free from GPS limitations, but it seems like it's constantly running into limitations of its own. The report paints a picture of a company with a vision, but struggling with profitability and facing a tough regulatory landscape. First, the basics. They're listed on NASDAQ under the ticker symbol NN. It's common stock, so nothing fancy there. This report is for the fiscal year that ended December 31, 2024. So let's see how they did in the last year. The report does mention that as of June 28, 2024, the market value of common stock held by non-affiliates was about $628 million. This is called public float and gives you a sense of how much of the company is actually available to be traded by regular investors. Now let's start with a summary of what you can expect in the future. In the report, it says operating expenses to increase over the next several years, which can be concerning. Before we get too deep, let's acknowledge the risk factors section. It's a long list, so buckle up. But it's all very important to consider before investing. One of the biggest risks they mention is that they expect to continue to incur losses in the future. In fact, they reported a net loss of about $102 million for 2024. Let's get to the actual numbers and see what we can learn. Revenue actually increased to about $5.7 million, a jump of almost 50% from 2023. It looks like they are actually selling something. Unfortunately, their cost of goods sold is still very high, over $10 million, but at least it's less than the almost $13 million it was last year. Good news. These costs also went up. As you can see, NextNav is still spending a lot of money. This figure went up thanks to some senior secured notes, more debt. We'll talk about the debt in more detail a bit later. All this adds up to a net loss of almost $102 million. That's quite the hole to dig out of. Taking a look at the cash flow statement, you can see why they're worried about their cash positions in the future. They used $38 million for operating activities. While the numbers look concerning, they received approximately the same amount from financing activities. As of December 31, 2024, they have about $55 million in long-term debt. This debt is worth keeping an eye on. Speaking of risks, they also depend heavily on a hosting arrangement with AT&T for their Pinnacle network. And their distribution deal with AT&T for FirstNet subscribers is also expiring in 2025. Durabsai TNT decides to discontinue these arrangements. That would impact NextNav greatly. Another major risk is tied to regulatory hurdles. Their future plans depend on the FCC approving their petition to modernize the lower 900 MHz band. But there's no guarantee the FCC will approve it or allow them to do everything they want with their spectrum. It's all up in the air. They have to renew their licenses to operate the current technology, and there's no certainty they can do so. Also, they operate in international market and are subject to world events, something that has become very relevant recently. There has been a leadership change. Susan Inslee is now the Chief Operating Officer. She previously served as the Executive Vice President and Chief People Officer. Sanyoogita Shamsunder has transitioned to the role of Chief Innovation Officer. This might signal a shift in focus. It may be a signal that they may focus on innovation going forward. And something interesting, Robert Lance, the former General Counsel, terminated one trading plan and adopted another shortly after. Then another officer adopted a trading plan as well. Trading plans themselves aren't necessarily signs of anything nefarious, but it's something to keep an eye on. Another item for the long list of things that can affect a company is a chance of strategic transactions. However, it seems as though they have entered into a note purchase agreement to be able to get $190 million from investors. There are quite a few complex parts to this. There are multiple mentions of cybersecurity. It's a big risk in today's world, and they acknowledge that they may not be able to fully protect their information technology systems. Also, the report is riddled with export control and other international issues with operations, which can make it difficult to business. The success of the business is subject to obtaining, maintaining, and enforcing intellectual property rights. Now, let's step back and try to make sense of it all. NextNav seems to be at a crossroads. They're burning through cash, but the leadership is making steps to improve. Their strength is in their technology and spectrum assets. If they can get the regulatory approvals they need and successfully roll out their next-gen platform, they could become a major player in the PNT market. That AT&T relationship is a big factor in the short term that you need to account for. Their main weakness is their lack of profitability and their reliance on external factors like the FCC and AT&T. There is a reliance on third parties. The opportunity lies in the growing demand for resilient PNT solutions, especially as concerns about GPS vulnerabilities increase. But they face the risk of competitors and regulatory delays that could eat into their market share. What I'm seeing is a company with a high risk, high reward strategy. The potential is there, but it relies on execution. If they can deliver their vision, the results would be tremendous. Their cash problems and reliance on outside forces make it a very speculative investment. Thanks for watching. If you enjoyed, please subscribe, like, and comment.